were thinking about starting a small company index fund. And then people kind of liked the idea of that, but they weren't too sure about indexing small companies. So then I just made up the term dimensional. So the next couple of people I talked to said, we're thinking about starting a small company dimensional fund. And people seemed to really respond well to that.
David and I had stayed in touch over the years.
Rex called up and said he'd gotten wind through Richard Ennis what we were doing. And he'd been thinking about doing the same thing. And so I said, well, then we should talk.
In our conversation, we had discovered that we both had pretty much come up with the same product, almost down to the level of detail. And so he said, let's get together. And that's how it happened. We got together.
Their basic idea was that pension funds just weren't being exposed to small stocks. And there was a business opportunity just in providing them small stocks.
The idea was to, instead of pick individual stocks, you could have an index or a diverse, a passive index portfolio of small cap stocks and offer that to your clients as a way of diversifying their portfolios.
It's having that kind of a collaborative framework move forward into a practicing realm. So I think it's really sort of just an extension of this University of Chicago finance culture from the 60s.
Here's a couple guys out of business school, really smart guys, honest guys, I think had the right idea. They wanted to provide investment strategies that worked, that were low cost, that were focused on, the clients.
And there's a huge influence on just thinking about how you design products, how you thought about things. You just didn't do something. You actually did something because it was rigorously proved.
It grew slowly. Over the first year and a half, there was a serious doubt about our ability to survive. We ran out of money a number of times.
It was really, it stretched, it took every kind of skill we all had to kind of pull this off.
I think anyone starting out on something like that doesn't actually know when they start that it's going to be successful.
The sales force at DFA had to go out and make the hard calls. It was not an easy thing to do. The consultants were not friendly to us in the beginning at all.
Most consultants were very biased towards active management. So it was difficult to have conversations with consultants.
What we took to really make things work is we took a lot of the academic names that we had with us.
Frankly, it added a lot of credibility in the institutional world because we went out and we said, we have this group of people from Chicago. They were all household names in the field of financial economics.
If I call up and say, Myron Scholes wants to come and talk to you about an idea, and these big funds, it was like, I called 5 big funds, institutional type funds, and they all said, sure.
It was clear that we had something that was saleable. So it was just a question of surviving over a period to cover the rather high cost of running these large passive portfolios.